Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Oh, good morning, guys. It is Friday. Bring the music down there a little bit. And, this could be a good Friday, guys. I think there is absolutely nothing interesting or special about this day, Friday, May 31st, whatsoever. Nothing special about it. There's nothing interesting going on at all. Except for one thing. There is one thing special going on. Oh, you forgot, didn't you? Did you guys forget? It's PCE today. We get PCE in 2 minutes. Aren't you excited? PCE. Let's go and check out the markets here before the PCE comes out, huh? And pull up a chart here. Wait, which chart is it? There we go. Okay, so treasuries, a bit of a recovery yesterday. They really liked some of those numbers that we had. I felt like their reaction to that was a little bit overdone, but like whatever. I also kind of wonder if this downside was maybe overdone too. So, they're always doing crazy. S&P 500 kind of took a dive yesterday. Tech getting routed. It just doesn't look very good. But you know what? Like, look, we were at all-time highs. So is it like a huge deal? I don't know. I think we're okay. Oil still kind of struggling here. So it did kind of turn into like this. Oh yeah, the geopolitical tensions, but they just don't really want to get too far into 80. It seems. The gold and silver, there's a middling. Copper's still kind of, in the doldrums. Obviously, this stuff right here was like all-time highs and was crazy too. So, maybe that's not a huge deal. The Japanese yen. So yesterday we saw, some upside in the Japanese yen. It wasn't bad, but they weren't really able to hold it. Some inflation news in Japan comes out and cuts them back down. And the Bitcoin not really doing much of anything. It's kind of getting boring over there. So that's the setup that we have for today. And I'm not going to trade this, but the PCE is here to come out. Also, consumer spending and personal income. So we get a bunch of numbers. But the U.S. core PCE price index month over month is expected to be 0.25. If it ends up being something like 0.2, then, this market could really take off. Oh, you're right. I have the date wrong. Thank you. How could I not know what today's date is, May 31st? Not that there's anything special or unique about that day. Okay, so here's the numbers. Well, I'm not getting all of them, though. That's, I think, why the market's being a little bit, iffy here. Okay. Okay, so U.S. headline PCE, expected spot 3 got spot 3. Core PCE was spot 2 versus spot 2.5, so that's good. That should probably cause some rallying. But what about the other numbers? Personal income spot 3. Real personal consumption, they expected to be spot 1, but it was negative spot 1. So I think that all of the key things that we were looking at here, in the direction that the market would like to see, I think we should get a decent rally off of this. I don't know, what is the chances of it running? But we have all sorts of key levels from the 28th to go through now, so. I don't know. I think that PCE number is an important number. You should see a pretty strong reaction from the markets, and it was, I mean, it wasn't amazing, but it was pretty good. But so far, the reaction to it actually seems a little muted to me, don't you think? It is, well, like, actually, in the 30-year, they're actually actively selling the 30-year. I think that probably you're still getting a steepener here. They're buying the 5 and selling the 30. So maybe that's why it's kind of iffy. But the volume so far is actually quite tilted to the downside in ZB, and it's kind of iffy in ZN. So it's not really giving me the sort of like strong flows in one direction that I would like to see for like, you know, really good directional trades. Even though I think all of the news was in the direction that we would like to see. Okay. By the way, I didn't say good morning, everybody. Good morning, Octavius Forrest. Haven't seen you in a day or two. Uzi, Apol, Alan, Smitty. Perfosse, that's a new name. Thank you for joining the stream and pointing out that I had the date wrong, because I always neglect that. Hi, Q, Jake. Good day. Oh yeah, we got a good number of people here already. You would think that like there's something weird or special about today, and that you all came to join me on this special, but it's not. It's just a normal, typical Friday. And it's not like there's any kind of interesting news or political happenings going on that would cause more people to want to tune in and hear what I have to say or anything like that. I don't think anything like that's going on. So I think I'm just lucky today. And we should have a fun set. I mean, I don't know. This is kind of interesting watching this reaction to PCE. So I think we could have a good session today. I'm trying too hard. I no, I'm not. Because there really is nothing special or unique about this day, May 31st, 2024. I didn't know that there's a little smiley. That's great.
Block by.
Okay, now that's interesting. That caught my attention. There was a big sell there at 20.5, and then somebody turned around and bought it at 21, and now they're going further up. You know what? If the micros were not such a wide spread right there, I maybe would have gotten involved. But I do not like that. The flows are still mixed, though. So what I see here is I think the treasuries are going to go higher, but I think that getting a good spot might be hard because there's a little bit of shenanigans going on. That's sort of a situation where like there's a big block sell and then immediately somebody block buys it the other direction. I haven't seen that for a lot. That's a rare event. That's a little wild. But you know, if I don't feel like I'm getting really clear directional flows and like a really good spot, I kind of feel like it's better to avoid that kind of an area.
Block by.
There's just some big guys doing some stuff in here. I don't 100% know. I mean, my guess is that they're fighting it out and that somebody really wants to buy it, but I don't know. Well, see, Octavius, he's long. I do think it should be long. Actually, let's come in and do the flows. Okay, so let's see. First, put in at the beginning, the date. Just a quick note, nothing unique or interesting about this day May 31st. Nothing interesting about it. Nothing unique or interesting about that day. Okay, so flows, what do we got? PCE, core PCE, rather. Core PCE. Better than expected, let's say. And personal consumption down. Friday flows. Closing positions for weekend. Action tends to end early. Let's just note liquidity. Liquidity seems thick. They are out there market making in the treasuries today for some reason. And now we are getting big orders. So I don't think that the big orders is necessarily predictive of future orders, but the thicker liquidity is. The thicker liquidity means that there are some people out there that have to do business today. Oh, because it's the end of the month. That's why. Oh, it's the end of the month. There is something, another unique or interesting thing. There's just thing after thing about today that makes it so special that I'm just realizing. End of month flows. End of month flows. And the end of month flows are likely to be long too, because, S&P 500 did pretty good in the month of May, right? So they're probably going to sell equities and buy treasuries. Now, on the other side here, the S&P 500 is starting to pick up a little bit more steam. Like, the initial reaction to the news was a little bit muted, but the S&P 500 is starting to figure it out and is saying oh no, actually that's really good. Oh my gosh, it's hot in here. I don't know what happened. Well, you know what? I had the door closed overnight, so that's probably, all of the heat from the computers. I'm just gonna air the room out here real quick. All right, I'll be right back. All right, we're back. Let's see here. Ryan asks, how come the core month over month was lower than expected, but the year over year was higher? Good question. So let's see here. What are we talking about? Core PCE price index year over year, 2.8 versus 2.76, but the core month over month number was spot 2 versus spot 2.5. I don't think I know enough about how CPI or PCE rather works to know. I think that they do a real comparison to prices today compared to prices a year ago. It must not just be adding the monthly numbers together. I tend to think that, or not tend to think, I tend to go along with that the monthly number matters a lot more for the day trading, but perhaps in this instance that might be why the reaction is a little bit more complicated than I thought. I did kind of think that same thing as like, I looked at the year over year numbers and they didn't quite make sense to me, but I just ignored it because I know like what I care about is the month over month number, right? The headline PCE price index was in line 2.7, so I don't know. So, my wife got me this new deodorant because for whatever reason, what I was using before just did not work. So I get this new deodorant. It seems to work. Like it didn't smell as bad yesterday. So I like my gut and everything, like is so imbalanced, and apparently like that comes out in like your body odor and stuff. It smells like onion. It's not a good smell. It smelled better yesterday, but like when I put this stuff on, it feels hot and tingly. You know what I'm talking about? Like, there's like mint and that makes things feel cool, but then there's other stuff that, when you put it on your skin, it kind of makes it feel hot. It feels like that. So then I told my wife about this and I'm like, here, let's try it on your arm here and you tell me if it feels hot. And she didn't notice anything. So now I'm thinking, am I allergic to this new deodorant? Because like, it's kind of a weird sensation. So that's what's going through my head right now, instead of rather, the PCE numbers. By the way, Ryan, I think we'll get deeper into that because if I'm just going to wait, but there's going to be, a couple of reports and synopsises of those numbers. And when we kind of dig deeper into that report, that might kind of give us a better idea about why the yearly number was up, but the monthly number was down. Because you're right, like last month it was spot 3. This month it's spot 2. But then somehow the year over year, well, I don't know. Well, maybe it's just the estimates, right? The estimate was 2.76 and we got 2.8. And the monthly estimate, so the yearly estimate was higher than expected, but the monthly estimate was lower than expected. I don't know how that works out, but I guess it's not just that they add the previous months up. Oh, that's interesting. So I'm just popping over here. So Zero Hedge is reposting the story from Bloomberg. Let's read this story. It says, market goes into PCE with almost everyone neutral bonds. Positioning across most indicators shows investors are fairly neutral U.S. Treasuries going into today's PCE release. The market is still slightly short, however, which points to more downside risk for yields should PCE come in lower than expectations. Well, it did. I don't feel like it moved as much as you would have thought for that, but okay. April's PCE data is released today, and the indifference is palpable. Now that, of course, tempts fate, but that doesn't really look like the setup favors a durable market shock, i.e. one that is sustained after any potential knee-jerk reaction. Still, there is some inflation fever in the air today after Eurozone CPI came in higher than expected. That's a good observation there, or a good thing for us to know. Positioning in U.S. Treasury looks much more neutral across a collection of indicators. A straight cut of the commitment of traders data can be misleading due to the basis trade, but we can infer speculator positioning by netting asset managers and leveraged funds with the second, typically placing a trade with the first. On this basis, it looks like speculators' positioning is almost flat after being net short for the last few months. We get a similar picture if we infer positioning of macro CTA funds based on HFR indices. If we take a multiple regression of the index of funds returns with stocks and bonds, we can see that the bond coefficient, an indication of the sensitivity of funds to US Treasuries, has become much less short and is now close to neutral. Similarly, a proxy based on bond futures open interest infers that positioning is back to nearly flat, and the JP Morgan Treasury survey for all clients has become progressively less long and is near neutral. The core PCE deflator is expected to be at spot 2 on the month. That was at spot 3 on Thursday, as later estimates have been driving the median expectation lower. The market is perhaps more confident of a lower print after the lower than expected PCE price index that was released on Thursday. With faster money operators look like they are still leaning a bit short, there's probably more potential movement to the upside in bonds should we get an even lower print than the spot to the market. Well, we did get that and we moved up. It wasn't that dramatic, but it was okay. Standing back stocks are looking overbought versus bonds. A rally in bonds would be one way for this condition to be worked out. Okay, so that's interesting. So they're saying that, given how much the equity market has rallied, that the bonds are kind of lagging. Well, they initially came up to this 22 area and now they are breaking out a little bit higher. There's still a bit of a spread here. It looks like the spot when I rejected taking a trade, it looks like I could have made 15 bucks from it. So actually, it wouldn't have been 15 bucks because I probably would have had to have hit 525. So it actually would have been 10. But if I can make 10, that's okay. Oh. It was a little slow. I saw that and I was like, oh, they're going to tick up and break. Let's try it right here. No? If the deodorant is bothering you, make sure to try aluminum. I absolutely am into the aluminum free. So this deodorant, it seems to be made out of like something that's made out of corn, apparently. So then I'm like, am I allergic to corn? I do consciously avoid eating corn, especially like corn on the cob, because that really hurts my gut. But send more F-16s will help economic growth. Okay, well, Octavius got a good trade there. That's good. I wish I was a little bit more willing to have taken risk in that situation, but I just really did not like the spread, man. And now that I'm thinking about maybe taking a tiny little trade here on Sim, and it's kind of doing some funky things that I don't like, so who knows? He must be talking about Ukraine, but I haven't seen any real headlines about Ukraine as of late. I'm sure that soon we will see something, but I don't know. I don't know really what's going on over there right now. Kind of seemed like that Ukraine was falling apart, but then nothing has happened. So apparently that was maybe Russian propaganda. I don't know. Zelensky was interviewed on The Guardian. Okay, what is Nick here saying? Hold on. Core PCE price index rose 0.25% in April. January through March figures were revised down ever so slightly. Ah, there you go. The 3-month annualized rate was 3.46, down from the previous 2 months, but still higher than at any point in the second half of 2023. This report was largely anticipated 2 weeks ago and won't change much of anything for the near-term Fed outlook of wait and see. Huh. Interesting. So here we're getting again, I kind of feel like that those numbers were pretty good and that the market should react positively to them. And then you have the end of month flows on top of that. So my prediction for the flows is long. Flows likely to be long with strong spread activity. And lots of volume at close. That's the other thing, is that when the S&P 500 closes, you're going to see like some insane amounts of volume and stuff in the treasuries and the equities. Okay. So that has me positive, but then I go and I look at the net flows, only 10,000 long in the treasury. Okay, but the ZB did eventually come through and start going long. So there was definitely a win in there, but I do have some reason to be cautious here because the flows are not performing quite the way that I would have expected. Like, I think that a piece of news like that could be 30,000 contracts. So does that mean that there could be further upside? I suppose, but that all we've gotten in the first 20 minutes is 10K is a little weird and says to me, like, I don't completely have it right. There's more to it here, I think. Okay, here's another from Nick Timros. Could you come up with a report to better punctuate Chris Waller's point last week that monthly inflation needs to be good without torturing the data? To get the favorable spot 2% core PCE rate reading today, you had to go out to the third decimal place. Yeah, Octavia says, I think we stall. Follow through for the upside would be a second leg meta order. Yeah, so like, okay, they were pushing highs. There was another price that was looking, and I saw it. I was like, oh, they're gonna take that one. So I put an order in there, and I was too late. And then I thought, oh, okay, what about 25? Because there's a big volume there, but they didn't really trade it, and then they ticked down 3 ticks. And so that immediately puts me into, oh, maybe square root law of meta order impact is coming in. Maybe they start to build out an area here at 24. So there was a big block buy there at 24. That, well, maybe that's some more buy side demand that will push us through, but that could also be the sort of thing that like pins us there. Okay. And so I was kind of thinking, oh, okay, we have to wait 45 minutes, and then if they're going to continue up, maybe there's a second leg. But I'm not sure that one may really make sense either. Well, they're right back up there already, for starters. But, you know, when it's based on economic news, they don't always wait, you know? So the micros are being a little, We could see 4-5 though. I don't know. I think another thing that's going on here is just me, right? There's been some decent trades. I've passed on a lot of them. It's summer trading. I'm just like, I don't want to take risk right now. I am kind of a little twitchy because we're in the heavy part of my weightlifting cycle. So I wouldn't expect myself to be like super anxious today, but maybe a little bit. Oh, wow. Are they already going to be back down there? Jeez. Man, I don't know about that one. There, you know, there was like the block buy there, but there was block orders all over through this 25 half 26 area. I don't know. What do jurors do at a court? Why would you bring that? Is such a bizarre thing to bring up. But I will tell you, the jury's job is to follow the judge's instructions and make a decision based on the instructions and the evidence that they're given. Oh, you have jury duty? It was just, you kind of just brought it up out of, like, nobody said anything. I was like, did you like post that in the wrong window or something? But you have jury duty, I see. Well, you know, just, if you just say the right things, they'll dismiss you, right? Unless you really want to do it because you get paid days off of work. If it was me, if I ever get called out for jury duty, I would have really mixed feelings on that, because on one hand, I think that, like, looking at a case and really investigating it and following everything that goes on in a courtroom would be, like, incredibly interesting for me. But then on the other hand, that would be like possibly weeks or months of having to focus. And that would be really, really hard for me, so. Hey, Octavius, that's a good observation. I tell you what, man, you're so sharp. The dollar is getting crushed here. The Japanese yen really so the Japanese yen was down pretty significantly overnight because their inflation data was a little hotter than people wanted. And so they're just running up and pushing through all of the downside that, you know, I mentioned at the beginning of the stream. And it seems that this is across the board with the dollar. The euro is moving up and the dollar is moving down. So that is another reason where, you know, we could potentially. So the flows in the treasuries are still a little iffy. Look at these. Right, like, it's just not based on the news that we had and everything. I don't know. The ZB ended up coming through and is looking pretty good. Okay, but like the 10-year, it's still only 14,000 contracts. It's kind of iffy. But if it's actually the dollar that's moving things, that could maybe explain where you're able to get reasonable upside, even though the flows don't seem to match so much. Not that it's that they don't match, it's just that the flows are not nearly as strong as I would have thought. Let's say that he's not guilty, but the judge says he's guilty and I wear strong cologne. One of the jurors wears strong cologne? And the judge be like, that guy. You think that the judge would be more likely to pick you for jury duty because you smell good? I don't think that's the way that it works. I think that they pick you based on whether you're a white male or not, and where you live and these sorts of things, and they make all sorts of really large general guesses about what your what your predisposition to convicting certain kind of crimes will be. It's an EXP. Now, Smitty, what Ukraine bombshells this morning are we seeing? Secretary of Blinken is talking right now, by the way. I'm not, the news squawk isn't really here. Maybe my news squawk is messed up. I'm just going to refresh here because I don't think I've heard anything. Dollar getting crushed, but not so much. If it was really good news, it would be at 104 right now. Well, I don't know about that. I mean, I get what you're saying, Kyle, but as of late, the dollar moves haven't been as big. Like 20 cents in the dollar right now is a pretty big move. Obviously, if it was like groundbreaking stuff, then sure you could have a 50-cent move, but I wouldn't expect PCE to be that groundbreaking. But let's just say we are getting a move. It seems to be more concentrated in the dollar than in the other instrument. Prisoners ran when the dragon... Wait, why are you bringing that up? That's so weird, Captain. Because are you messing with me? Because my stepson all of a sudden has gotten back into Skyrim because there's a multiplayer mod for it. So he wants to play Skyrim. He wants to play Skyrim with his cousins. And his uncle was like, I don't know about this game. Is this really appropriate for 12-year-olds to be playing? And yada, yada, yada. And so he had to give a thorough... he wrote an essay on the nature of the game and what was in it so that he knew that it would be okay for them to play. I was kind of like, it's Skyrim, guys. Really? And my wife, she didn't know. So then I had her watch videos on YouTube where you can go and, you can get married in Skyrim and all of that. So it showed her like the romance videos of people going through the romance storylines and so forth. Yeah, it's not Grand Theft Auto. You're totally right. I thought the whole thing was funny. Trace it back to April 10th, the doomed CPI that spooked markets about fears of no rate cuts this year. Dollar moves were huge. That's all okay. Let's do that. So, pull up my dollar chart here. And it was April 11th, you said? Oh, you must mean this one. And the dollar went from 103.7 to 104. So it moved the whole dollar. Oh, wow. That's pretty good. Yeah, but you just look at, and for me to put the indicators on, I think it would take a little bit of time. I don't really want to do that. But if I were to put like average true range of the dollar on here and everything, I think that you would find that like a 20-cent move is pretty decent. But you're right. It's what we got is not groundbreaking news for sure. For sure. By the way, let's come back over here focusing on the current action. My spider sense like really triggered off when we had all of these market orders at 25, 25 half, 26 big 1 and 2,000 lot orders. Well, we're lower now. I didn't expect it to be a whole dollar since moves are up are bigger than moves down because of volatility increases, but I would expect at least a 50-cent move, and it didn't do that. Nah, I don't know. I mean, obviously it probably doesn't matter. I mean, it's kind of funny because what we're really doing here is we're trying to like our neural networks up here are saying, okay, so we had this is what the news was, and this is what the move was, and so what I'm trying to sort out, and don't think of it as in terms of price. Obviously, in the dollar index, that's all we can see is how far it moved, right? But really, here in the treasuries, we want to think of it in terms of order. What was the net imbalance in market buys and market sells? It was about 10 to 15,000, which is kind of like what you get when you have C-tier news that's good, right? So it's kind of acting like just a standard news event when we would think that the market was just really paying attention to PCE. Okay. So I'm kind of sitting here saying, I think it should have moved more, but I don't think it should have moved as far as Kyle thinks it should have. But at the same time, we know that the market is never going to move as far as it should. It's always going to move not enough or too far. So, but it is good to go back and look at past events so that we can say, okay, when we had that CPI 2 months ago that really spooked the markets, the dollar moved a whole dollar that day. Oh, you say that weekly options on the currencies were implying a larger move, perhaps? That's interesting. But you know what? So let's just assume that what we're seeing is a significantly more muted move than what, like that there really is something like super, super off. Like there's got to be some explanation for it and not just like, well, the market doesn't always do what it should. Maybe it's just because of the end of month flows, The treasury is really thick this morning. You're seeing like a lot of these prices down in here being 6,000 contracts. So there are definitely like players out here involved. Okay, so there's another block buy at 24.5. They're not done, apparently. So I'm already starting to get into this like, okay, these are happening too much. They probably are not going to be as useful as they usually are. So I think I need to start ignoring those. Euro is thick as well. Okay. The liquidity in the micro treasury yield futures is still a little iffy. Now, I'm just realizing as I say that, this is the last day for this contract. So maybe that's why they're being a little weird. Do you think, let's just do it this way. Let's just change this one. NY, M, right? NYM. Yep. Uh-huh. That is better. There's not like more volume overall over here. Or liquidity. There is not more liquidity overall over here, but there is less spread. Yeah, you say most contracts get abandoned on the last day. I would say that I kind of see kind of odd behavior in the liquidity on the last day, but that like the trading can still be pretty good, and I've gotten good trades on the last day. But I've also found that like the actual volume tends to completely. So let's pop over here to the CME website. CMEgroup.com. Interest rates. Products. Maybe you need to search for this. CME micro treasury yield futures. Come on. Not quite what I wanted to see. Okay. How can I do this? New. Let's do it with a market analyzer. New market analyzer. And then I'm going to add instrument search. NYR. You're not going to tell me what the daily volume has been, huh? Oh, I hate this. That looks like there's still a little bit of like, I would almost say chasing behavior. Like it starts getting up there and everybody's like, oh, maybe it's gonna break. They're going for it. I know there's a way to change. Well, let's try it with the chart. 10 micro year futures. Bang. And then I come back to data series and I'll say 10 YR 0724. Aha. Okay. But we actually want day. Okay. Cool. And now, oops. Indicators. Vol. And vol. Put this one on the other one. And make this one the color be gold. That's the new contract. No, it's not working. Because it's telling me the volume is exactly equal between the two of them. What? My market analyzer isn't even telling me the volume. You say it looks like a second. It could be. We are getting some rise in cumulative delta. I could take the trade over here in the new one. My issue on this one, though, is if I take 505, how likely is there to be a little bit of middling around at 4.5? So I don't know if there's enough reward in that. Unless I think it's going to just blast through it, but I'm not so sure about that. So I think what I might need to do here is options, market data, do not merge. Okay. Over here, reload all historical data. And then it is not merging them. It is just saying that the new contract isn't trading at all. But that's not right either. Evens by the end of the day? Well, there's a good target. I don't know about the squeeze part. Because the issue is, the issue I have with the squeeze part is that from the data that we have, there's not very much strong positioning. So I don't know if you would actually get a squeeze. There are definitely large players executing today, though. So that, you know, if the amount of treasuries that they need to buy is really a lot, you could very easily get up to 109 even. Even though, I mean, it's going to be harder to get to 109 even because of how much liquidity there is, but I think they'll still do it. or that they could still do it. But that might not be till later in the day. I'm still thinking about the next 5 minutes. There's got to be a way on the CME website, cmegroup.com. Browse data products. Volume and open interest, maybe. Tools. Roll, maybe the roll tool. I don't have any. Really? Said it. I kind of want to figure this out. Any recommended resources for learning about flows, news, and its impact in financial markets, things of this sort? This stream. Honestly, I think that this is like the only place. That, and if you go to Zero Hedge, sometimes institutional reports that talk about flows will get leaked on Zero Hedge. And that's basically like the only places that I ever see talk about this, because what we're talking about is like really cutting edge and against the grain of what a lot of people want to believe about markets. And so not a lot of people have caught on. And that makes it really hard to learn about and to utilize and learn. But it also kind of means maybe there's more edge in it for us, right? Let's see here. Let's go in here. All mail. I tell you what, I really tried to work hard to make my YouTube page be, a really good starting point, right? So here, the start here, I mean, this is a really big playlist, but like it tells you all of, if you know nothing, it tells you. Now, a lot of the stuff that people need to get started is like, what do I need for my computer? Okay, but these are all videos that, like, I would literally, my recommendation to people would be to just come in and watch all of the videos in this Start Here playlist and watch all of the videos here in this Order Flow playlist. If you want to do NinjaTrader programming, just come in and watch all the videos in this NinjaTrader. that big. Right? Then you get into education and analysis, which is just like everything. So, you know, but I really did select the videos that were going to be like the most important for you to start. Is to start here in order flow. So now you're talking about flows, so that suggests to me that you already watched the order flow one, right? If you've already watched the order flow playlist and you're kind of you know, still thirsty for more content, if you go to speculatorseth.com/strategy.html, then you can sign up to receive an email with a PDF. And that PDF goes over the same information that is in the order flow series, but it is much more detailed and focused around the idea of how do you actually build a real strategy. So that's where I'd go. So I tried to reset my CME password and it's not working. I'm not getting anything. Maybe I'm using my other one. Oh, wait, I think that worked. Ah. Okay. But now the problem is going to be, yeah. It's not going to show me the micro treasuries. Market freeze? By the way, did you guys hear about that whole, like, the S&P 500 index was not publishing yesterday late into the session? That's crazy, man. Can you imagine being that site reliability engineer? Oh my gosh. That would be like 5-alarm fire sort of a thing. Volume and open interest this week in options. Okay, no, house active strikes. I just want the ones that are just like, so like if I come over here, so if I come to markets, let's say equity index. Okay, then we're gonna scroll down here and they're like, oh, okay, here's the S&P 500 futures. I go to here. This is what I want, right? Quotes, volume, right? That's what I want. Markets. And your note. Where's Uzi? I need to buy the TLT open. How many total flows do you think exist? Oh, well, I think that there could be an infinite number of them. I mean, really what it comes down to is there a piece of information that could potentially predict future flows? And here are some of the ones that we're pretty confident will affect future flows. The PCE and personal consumption numbers are going to cause people to place orders. It being a Friday and people wanting to get things done early so they can go, go home for the weekend. That's something that predicts orders. It does. End of month flows, that's something that really predicts orders. And liquidity being thick is also kind of a sign. That's probably because the end of month flows. But right, those are the flows that we're watching today. And what I do is I just come in and I list all the ones that I know, and then I say, okay, based on these flows, I think it will be up or down. Well, I think that it's likely to be up with strong spreading activity. I don't know if we've actually gotten that yet, but the spread is maybe flattening a little bit, and lots of volume at the close. But, I'm a little bit weary about where I take my trade. But I'm still at trying to figure out where the where the volume is. View an interest rate product. 10-year yields. Is this going to give me what I want? NYM4. Okay, so now that's interesting. So the quote that it gives me is already the June. Aha. It has moved. There has been 321 contracts in May and 869 contracts in June. So, man, that sucks. So I will remember that for the future. I mean, I've messed around with it before, but I don't think that I've ever been able to get in and directly compare the volume, I think that on the last day of the month we switch. I think we switch on the last day of the month. And if I wonder if I would have taken a trade if I was looking at the instrument with more volume and liquidity, because part of why I didn't take a trade there was because the spread was so large. I was like, oh, that's probably not going to work. It's kind of funny. Where was it? It was like, oh, well, I can't tell anymore. But I think that we're still only $15, even if you held on to it this whole time. So it kind of looks to me like this is an ascending triangle now. You might not see it on a chart per se, but you're definitely seeing it in the flows that they haven't been able to get above 26, but every time that they pull back, it's smaller and smaller. And that at some point they may bust through here and go to the upside. How long does a flow last? Do you think if a market is still rallying at the end of the day, contributing to it, news is reliable, will strong news lead to buying for multiple hours? Okay. So what I look at, or the way that I'm trying to approach it is, so I have a piece of information that I think will predict future orders. Then the next question is, how many orders, right? So if it's the end of the month and people need to sell equities and buy treasuries, how much money actually is that? But there are ways to quantify it, right? And it's such a large amount that for the end of month flows, for instance, that's probably going to take them all day. They're probably going to be passively executing and buying contracts literally all day. And they will kind of do it in waves. So if I don't know if, I think you've maybe been around when I've explained this, but I'll explain it again. There's a square root law of meta order impact, which is to say that if I'm executing a large order, how much will my large order move the market? Well, that the amount that it moves the market scales with the size of my order. and there's kind of a diminishing return. So you'd think, oh, this order is twice as big, it should move the market twice as much. But that's not actually what happens. It only moves the market 1.1415 or sorry, 1.414256, something like that, right? The square root of 2. Okay. So it's like a curve. And what tends to happen is like a liquidity hole will form. It's like you've been trading into the market makers so hard that the market makers just go like, well, I can't, I can't put liquidity out because you just keep moving through me. So the latent liquidity in that location basically becomes low, and they try to build a little hole. Yeah, it's not 1.14. I think it's 1.414. Anyways, so they'll get stuck there. And when you get stuck there, it's like it's really hard to move out. There's the edges, and there's a lot of liquidity there, but there's no liquidity there, and it just gets stuck. So for us retail day traders, that sucks. That's like, it's not going anywhere for 45 minutes. So get comfortable, right? Okay. But for those big block traders that have these orders that are probably going to take them all day to execute, that could be a good spot for, to trade a lot of volume. It's just, I will have to be less aggressive about it, be really passive about it, right? So what they do is, they trade a big amount. They kind of form that hole. They let it come back and form that hole. And then, it sits in that, and you can trade more volume in this area than you can anywhere else. Oh, it already went. Was that why Uzi is saying sorry, lol? Anyways, once the liquidity is healed, then you do it again. And so it goes in waves, right? I talk about it in one of my videos. Which video is it? Where I introduced the liquidity hole concept. And that is in the strategy thing too. I think it's in the proven markets behavior is kind of where I talk about it the most. Also, there's one, what was it, like a more recent video, wasn't there? Like I think I really talk about it in the volume profile video too, because this is kind of why you will see these things in the volume profile. Is like that point of control typically ends up being the center of that liquidity hole. And that's kind of what causes it. Anyways, okay, so when you ask, okay, like how long will the flow last? Well, I can look at how big it is, right? So if I think that we're going to trade 60,000 contracts net change, and we've only done 20,000 and already made a hole, right? Then that means that there's probably going to be a next leg, and the next leg is probably going to be a half to 2/3 of that. So like there's probably going to be another leg that is 10,000 contracts or something like that. Right? And this is why I like to use cumulative delta as a reading for when I take profits. It's like I'm going to have an estimate of how many contracts I think need to trade based on that predictor of order flow. How many contracts am I predicting? And then when I've reached that number and I can see the market settling into that liquidity hole again, that's when I take profits. I think it was a little bit too long-winded about that, but I gave you a really thorough explanation there. I heard of someone create a strategy around bonds, end of month, contract month, robot James. That sounds like that would, yeah. The end of the month is extremely likely to be a buy. Like the last and first days of the month are extremely likely to be buys. And then on top of all of that, you've got like the news and everything else is, yeah, Treasury should be an upside day today. They did get above the 26 and traded a few new prices, but it's still slow. So this is like going to be a slow creeper. There was a point at which the micro treasury was giving me 4.51, but you know, I was too busy talking. They're still not giving me 4.5 though, so that just kind of tells you how tight and thick the liquidity is. I think this is one of those days where, you know, like Octavius was talking about 109 even. I think that that's a realistic target, but it's going to be like a slow creeper the whole way. Like, I'm not sure that we see that before we're done trading. Wow, it's only 7:37. Okay, well, what's the S&P 500 doing? They peaked a little bit early, back down to 5260, and maybe finding some support and coming back up now. I think we should. I want to check a couple of stocks here real quick. Trading view. Yeah. Oh, third long. Really? Okay. Okay, so here's Donald J. Trump. It's they were down in the overnight. They recovered and moved higher, and then giving up some of those gains here at the beginning. I wonder if maybe some sort of a squeeze is going on, or I don't know. That's kind of interesting. But you know what? It's unchanged, so maybe it's just random. Unchanged. I don't think that there's anything unusual or, you know, that could be causing that to happen. What about GameStop though? What's GameStop? GameStop is popping this morning. So why would GameStop be popping and DJT be selling? That's kind of a little bit weird. Also, GameStop is popping like way more than I would. Move this out to a little bit further back. Okay, so this was like, oh, they're selling new shares. Then this was they're done selling new shares. But they're still not above 24. Okay, so that's interesting. Oh, don't tell me you're going for another trade activity. I really feel like I want to take a trade, and I'm just not. I just don't feel like I'm in the position to do so for some reason. I'm still stuck at the why would I go short right above 4.5? Well, now I could hit 4.5. The inside spread. It may just be better if I really want to take trades in micro treasuries to just wait until next week, you know? There's going to be lots of economic news and things to move us, and we'll be on a new contract. I'm just not. I'm really concerned that the liquidity conditions in this particular situation could really screw me over, because you're talking about, you know, well, I guess in here it's like 3 ticks, but still. You know, if you lose 3 ticks both sides, and then all of a sudden you've only made 4 ticks total on a 10-tick trade. So, an average size to move. Also, the treasuries are kind of like skidding up along that stop out zone. And I'm still not seeing the flows turn. In fact, what's with this? Why is the 5-year doing that? That's kind of weird. It has been a net buy though in the 10-year. It's just like it's way more jagged and volatile than I would like, you know? How would you compare taking advantage of flow/informational inefficiencies on higher time frames versus lower? I think that the sorts of things that you might look at might be different. You know, if I'm going on a higher time frame and I'm trying to take advantage of an informational inefficiency of sorts, you know, I've got to be looking at a much larger macroeconomic changes of sorts that are likely to persist for long periods of time. Oh, wow. Okay. Well, now I feel like, okay, no, there's a couple of weird things just going on here. So first of all, that was like a really abrupt move and change. The liquidity in the micro 10-year like just pulled there for a second too. So that scares me a little bit. And the inside liquidity has disappeared in the treasuries. When they popped up like 5 ticks, that was just like wowzer. So I was still looking at the, you know, I was like, wow, 4 or 5, and then it went another 10 ticks. All of a sudden, I'm like, whoa, what? Really? I wouldn't got filled, but whoa, really? It's coming back to it, so ooh, I don't know. But yeah, MBOs never pulled. I probably wouldn't. The market makers really didn't like that. I don't think I've ever seen such an abrupt change in the liquidity as that. And I'm not hearing anything on my news squawk. And I mean, I think that it was just the treasury. I don't see anything unusual in the yen. I do see a little bit of movement in the dollar, but I don't know if there's anything I can tease out of that. There was a number of relatively large orders that traded there in large block orders that traded in Yen at 27.5. Oh, and we are getting some financial data here. We go. Oh, yes. Oh, that was the PMI. Oh, my gosh, guys, I'm so stupid. How did I not get that on my list here? Yeah, sometimes I'm just so scatterbrained, guys. Chicago PMI. That was the PMI. That's what that was. Oh, dude, I didn't even read what you were. Yeah, you're right. I'm sorry. I really don't. I tell you what, man, it's a little disconcerting to me how much my, like, where I am at with my exercise and so forth will affect, you know, like my thinking and everything else. That was a pretty bad miss. Okay, so they got 35 spot 4 versus 41 spot 5. So that's a pretty bad number. Wait, how bad actually is that? Hold on, that seems like a little dramatic to me. Chicago PMI, let's pull the data series up. Oh my gosh, that is really bad. That is yeah. Those are recessionary numbers in the PMI. And they expected to be 41 and it was 35 spot 4. That's a little jolting. So if all your flows are pointing towards the upside, is that enough for you to go long? Yeah, totally. I'm still going to haggle over the price. And sometimes that kind of ruins me, right? Sometimes I'm too picky about the sort of situation that I actually want to put it in at and I miss it. Which is kind of what's happening today. But part of that haggling is more haggling over, am I in a good spot to take a trade, rather than is the market in a good spot to take a trade. So, no, Biden told me that recessions don't exist. Dude, it's some of the economic numbers that we get are pretty wild, right? Kind of seems to me, though, that like now that that number is out, that they're coming back down. Like that people are kind of getting stuck from that and bailing. So if I see all of the flows pointing to the upside and I'm seeing the market selling, then I don't trade. Now, sometimes, like 2 days ago, was a really good example where I saw all of the flows being to the downside, and they were starting the session out with a relatively mild buying. And so I said, well, that could maybe be this one flow, but that's something that I wouldn't expect to last for very long. And, then I started getting sell signals. And so, I did take a sell on a sim, and it worked really, really well. And it was so prescient. I was so prescient that day. It was like, you would, if you're just going along with the momentum, you would go in long. And I didn't. I said, you go short here. And it worked out. So sometimes you will see counter flows and it's kind of a trap. And if you know that the flows are very, very likely to be short, I might take a counter trend trade off of that if I'm really, really confident about it. But, which, by the way, reminds me, I fixed that indicator. Not fixed, but I added the caching to that indicator, and we should be testing it right now. I'm gonna do 1 minute, 1 minute bars, 1 minute bars, ZN, indicators, speculator Seth, market order, imbalance, cash, period 10. Okay. And I'm not gonna turn on tick replay. I'm just gonna let it go there. I'll put this over here. Or maybe here, I don't know. But I'll give it a few minutes and then see if it's caching the data. So once I started look, because I don't have it set to on each tick, so we won't be able to see until the close of the market. I know risk reward varies upon conditions, but how do you manage risk reward with your style of trading? Well, so that's kind of a unique question, the way that you post that. So like if I see the market and it's like this and it just does this sort of a thing, right? So there's these little zigzags, right? And these are like what we would call swings. And these are going to be in kind of in a little bit of a range. Like in the treasuries, they're 4 to 7 ticks, right? So 4 to 7 ticks is just like the natural noise of that market, right? So if I'm really catching a flow, like to make more than that, I really need to be catching a flow, essentially, is the way that I look at it. It's like, yeah, okay. I take a trade and then it goes like 8 to 16 ticks, and then I know that I actually caught like a real move, right? Rather than just random noise, okay? So what I want to do is I would like my stop to be larger than the random noise. And you know what? Sometimes or not sometimes, but I would say that a very large portion of my winners are just equal to that. So what I want my distribution to look like is if here is 0, I want, here's going to be the average range, right? So this is for micro treasuries, it's 10 ticks, right? And here's 10 ticks, right? And then I don't want very many losers at all beyond that. Okay. But then winners, I want some winners to run. Right? So that's kind of how I do it. It's like, if I'm going to take a trade, I need to see at least 10 ticks in it for me. But I'm shooting for more. I'm hoping that the flows move it further. Right? Sometimes increased volatility, things like that, I will let it go more than 10. I will let it go like 20 or 30. Okay, but only if I think that it's really going to go further the other way too. That's kind of how I manage it. And then my win rate should be, between 40 and 50% is what I'm going for on the winners, right? And then the way that should work out is that these really big winners end up being your profits, right? These cancel each other out, and that's your profit for these runners. That's the way. That's my intent. I wouldn't say I always hit those. I think that my win rate has been lower than I want a lot of the time, but my MFE and MAE is like 10. Like, I think that my MFE tends to be around 15. It kind of depends on which era of the market we're looking at. Now, a lot of that has to do with because I'm only doing one contract. On the sim trades where I'm willing to let myself trade multiple contracts, then those really get exaggerated, right? Like, when I win, they really run because of the way that I take the multiple contracts and so forth. Whereas if I'm losing, I tend to get out of it fairly quickly. So the strategy seems to really benefit from being sized up. Let's come to Zero Hedge and see if there's a synopsis now of that PC. After a somewhat weaker than expected CPI print 2 weeks ago, and with inflation data generally surprising modestly to the downside, the Dove's last chance for sooner rather than later rate cuts is today's PCE deflator, often described as the Fed's favorite inflation signal. And indeed, after last month saw a stronger than expected print in both the headline and core prints, the Bureau of Economic Analysis confirmed that the core PCE dropped from spot 3 to spot 2, the lowest monthly increase of 2024, with all prints coming in just as expected. Extending the scientific notation a bit, we find that the core PCE print was actually 0.249%, so literally made the rounding to 2% by 1/10,000th of a point, down from 0.317 last month. Amusingly, this brings to mind something Governor Christopher Waller said last week: "I look forward to the day when I don't have to go out 2 or 3 decimal places in the monthly inflation data to find the good news." As we also previewed, the drop in annual change in core PCE from just over 2.81% to 2.7537% means that the annual increase in core inflation is now the lowest since April of 2021, something which will surely allow the Fed to exhale and maintain its plans to cut rates sometime before the election, which in turn will give fresh wind to Dove's new wings, something which can be seen by the euphoric reaction in futures, which have spiked to session lows as yields have dumped after the report. We're only just barely below 4.5, so let's put a little bit of, tone it down just a little bit there. Okay. To be sure, it's not all roses. The Wall Street Journal's Fed whisperer Nick Timiraos writes that while the 12-month change was 2.75%, a 3-year low, the 6-month annualized rate was 3.18, the highest since July. He also notes that the 3-month annualized rate was 3.46, down from the previous 2 months, but still higher than at any point in the second half of 2023, which leads him to conclude that this report was largely anticipated 2 weeks ago and won't change much of anything for the near-term Fed outlook of wait and see. Taking a closer look at the data reveals that, like last month, the service sector led the month-over-month and year-over-year acceleration in headline PCE. For the core PCE print, it was also services prices that drove the acceleration. More importantly, the so-called supercore, that is, services inflation without shelter, dropped, led by the first drop in transportation services in 2024. Okay, so that is really important. Meanwhile, household demand fueled by allegedly steady growth, if only for illegal aliens, is also showing signs of cooling. The BEA's report showed real personal spending for services rose spot 1%, the smallest gain since August, while personal spending on merchandise decreased 0.4% last month. The aggregate number saw a negative 0.1% drop, missing the estimate for a 0.1% increase. Pointed that out. In nominal terms, income and spending both rose again on a month-over-month basis, although March's spot 7 surge in spending, which was downward revised from 0.8, but still matched the highest since January 2023. In April, spending rose just spot 2%, below the 0.3% expected, as income rose spot 3% as expected, also a drop from the 0.5% March increase. Goods outlays were restrained by declines in gasoline and vehicle purchases, while healthcare spending supported outlays for services. Other categories such as restaurant meals, recreation, and transportation decreased during the month. How are Americans funding all this? Simple. After plunging to just 3.6% last month, the lowest level since 2024, the personal savings rate remained unchanged at 3.6%. Meanwhile, with savings nearly drained, record credit card balance explains how people are getting by. All this takes place amid the 5th straight month of government handouts. And finally, while the markets are exuberant at the survey-based disinflation, we do note that it's not all sunshine and unicorns. The vast majority of the reduction in inflation has been in cyclical inflation. Ooh. Bottom line, looking ahead, the household debt hitting a record count. Well, okay, that's not accurate. You have to look at it as a percentage of like income, and it's not. Okay, that hitting a record it's only at a record because, you know, inflation is. Anyways, consumer confidence generally trending lower and interest rates at a 2-decade high. It remains to be seen to what extent consumers will continue powering the economy. That is a good takeaway, though. So you're kind of seeing things that kind of continue to suggest that we could see some softness in the economy over the next 2 quarters. And that would perhaps very much justify rate cuts. So yeah, good story there. That was on Zero Hedge that I was reading. Not seeing much else in the way of news to talk about.
Block by.
Oh, there it is again. I'm gonna try that one. Like, now you're getting a much more consistent buying across the board and everything. I think that the conditions are a little bit more right, and we are past that 4.5 area, so obviously I was wrong about. I mean, come on, I could have taken it like way up here. So I'm really, I need to get over that and just take, because I called it, right? Man, too picky. Yeah, and evens is in sight. I'm gonna be. Well, earlier I said I don't think that they'll get there before our session ends, but it's kind of looking likely that they do get it now, wouldn't you say? So if this was a 1 ticker, that would be good. I'm eyeing that big order at 30. Is there anything that could be understood by order flow vacant? Well, like the strongest, if you're looking for something that's purely technical, okay, imbalances tend to be persistent, right? So this sort of a thing, right? There's more market buys than market sells. You're seeing more market buys than market sells. Chances are you leave for an hour and come back, it will still be more market buys than market sells. Imbalances tend to persist. And so that's kind of something that you can kind of use as a little bit of a guide. Now, for day trading, you know, there's so much volatility and all of those sorts of things that on its own, that's probably not enough for you to really make money from it. But, you know, especially as like a confirmation, it's like, I think that the flow should be long. Okay, what does the cumulative delta look like? I'm starting to see a little bit of auto-correlated, you know, cumulative delta just keeps steadily rising there, you know, good straight line. I get in. So here, I'm still don't feel comfortable taking a live trade for some reason. I'm still really worried that it's gonna pull back on me. Like, yeah, they'll go up to 109, but first they're gonna come back to 27.5. You know. What about polling and stacking? So polling and stacking is a useful thing to look at. I'm a lot more interested in every time that it ticks up, how many orders did it actually take? You know, and like, is there a change? Like they were only putting up 500 contracts before at this price, and now all of a sudden they're putting up 4,000. That's like a huge change. Like I care about those things, but those are kind of more tea leaves. They aren't very reliable on their own because you know, like there's just so much going on here, right? That again, it's like looking at the ripples on the surface of the water and not seeing the tsunami that's coming your way, right? Rapid buy, yeah. Well, there was kind of like a machine gun to push through that huge iceberg at 29.5, and now they're nibbling away at 30. It kind of seems like you're still getting this kind of like slow moving train sort of a thing going in. I don't know. So I think the thing that really threw me off today that we don't usually see is all of these things, man, like that, you know, like really big orders that came through. So, you know, it wasn't really until about this point. Yeah, I think around here was the point at which I probably could have or should have taken a trade and did not. And it wasn't because I didn't think it was going to go up further. It was because I did not feel comfortable with my spot. But like, look, I could have taken it there at 26. It never would have come back on me. So will it come back on me here now? As soon as I take a trade, probably. Right? The longer it goes on, the more risk there is for that, right? It's kind of, you know, I tell you what, here's a heuristic that I use in a lot of things that, you know, it works most of the time. It works most of the time, except for like the trend days, right? And that is that the longer the day goes on, the less opportunity there is. But on a trend day, it just keeps going, right? So this is the same thing with social media. Like if you find yourself doom scrolling just say to yourself, you realize that the longer that you scroll, the shittier the content gets, right? Because it shows you the best stuff at the beginning. Now you're scraping the bottom of the barrel, the stuff that, you know, that was just kind of mediocre and people didn't care about. So, you know, just stop. Longer you do it, the more of a waste it is. I don't know, man. So this absorption that we're getting at 29.5 and 30 seems to be a lot more than any of the other spots, though. I'm a little bit, I'm going to cancel that 28.5 one. I'm a little concerned that if they trade me at 29, that they're just going to slice right through me. Because, like, I'm right at the front of the queue and I'm not getting any fills. And I'm worried that, you know, it'll come down, they'll trade me, and then I find out that, like, there's nobody else behind me and it just ticks down. That's the one I hate the most, man. Okay, now they're nibbling at me a little bit. I'm really not liking this. Okay, there's the fill. Oh, so I totally forgot our market balance, market imbalance thing. Wow, that is really. I'm surprised you haven't said anything, Uzi. It's been like they've been as 0.4 and as high as 0.7. Well, let's see if it put the data where it's supposed to be. I am not seeing it. Granted, I'm not getting any errors. Oh, you know what? I did not add the GUID to this. But then I would think that it would try and do ZN 1 minute dash market order imbalance cached. And I don't think that's what we're seeing. Which means that if I hit F5 on this, come on. Oh. Yeah. Okay. Oh, wait, maybe. Yes. Okay. There we go. And the GUID is bad. Okay, so it is saving it. It's just but I was correct about the GUID not being there, so it's not doing it in the right spot per se. I must have changed these to save in a different spot. I don't have to look at that. I still haven't gotten the fill on that offer there. Wow. Okay, but let's look at the file. The file says, yeah. Oh, wait, I have multiple data series in that. Do I? Do I now? This is what I love about my indicators. Is I save all of these. Oh, I see. Yeah, current buys, current sells, running buys, running sells. Ha ha ha. Okay, so but that's cool. That's cool. So it's doing all four of them. All right. Hey, we are in business, boys. So now what I can do, number one, is that we can backtest this on the cached data, right? As long as I have the indicator up. But then you go, oh, well, but we only put it out now, so now we have to wait a year. But what I can also do is I can take the data pipe data, I can put it into Python, and I can have the Python output what these would have been, and then save them into my cached folder, and then all of a sudden I have that stuff is cached for the last 2 years or whatever. And then I can do a real backtest on it. Huh? I'm feeling good about this. And all I had to do to make that happen was to add one property that I didn't add, but I need to add, the GUID, and inherit from my class. So I found a couple of little tricks that does allow me to do it, like use inheritance the way that I wanted to. So this is good. You have level 2 data for NinjaTrader. Can you use it for Jigsaw too? Well, so there is a bridge, right? So you there's the bridge, and you put a little indicator on the market analyzer, and then it will pipe the data into Jigsaw. That's how you do it. Anyone know mini Dow Jones DOM thin versus thick? That one tends to be relatively thin, doesn't it? Okay, so I'm really happy because I was concerned that doing all of that was going to be a lot of work to fix, and it ended up being a pretty quick fix. I'm still not happy with what I'm seeing happening going over here in the treasuries, right? So, like, I finally decided to get involved with a sim order and liquidity hole forms, right? Like, it has not gone anywhere for the last 10 minutes or so. Well, the rest of this session might be a little tight. Too bad there isn't anything interesting or unique about this day, nor is there any kind of like interesting political news or anything that we could talk about, you know, to pass the time. But it's just a normal Friday, so I guess we can just sit here and see if they ever break out of this tight range here in the ZN. It might be stuck like this. So the market kind of has this tendency to like not want to do anything until I'm gone. So yeah, the S&P 500 is giving up all of its gains, is it now? What's with that? Let's see here. Forex Live just posting a story about that. Let's see what they say. Major U.S. indices have now turned into negative territory. Adam warned of a sell the fact in his post yesterday, saying, "This is certainly going to be a market mover, and I worry about the stock market if inflation is high. There has been a dry spell for Tier 1 data in U.S. markets, but I wonder if we don't see a sell the fact trade. What has me worried is that the bond market has faded the entire CPI move, despite a lower reading. If CPI can't lead to a sustained move, why should a more dated report? Now, that assumes that we don't get a miss of more than 0.1% on the month over month core. But if it's like greater than spot 2 or spot 3, then the knee jerk may be faded, especially with a full data calendar next week and indications the market is starting to look more at growth data rather than inflation." That is curious. And because the growth data is alike, for instance, that Chicago PMI, actually, wait, so the Chicago PMI was at 742. Oh, yes, and that is almost exactly the high of the regular session in the there. Okay. That's interesting. This is the first time that I can think of in a long, long while, let's say within this market regime, that like weak economic data has actually been sell equities, right? Every other time it's been like, oh, that's great, interest rates will be lower, let's buy all the things. Not today. Very curious. So it looks to me like Donald Trump is going to have a press conference at the top of the hour. And now I'm hearing that Biden will deliver remarks on the Middle East later today. So those are both events that could potentially lead to some market volatility. Not that I have any idea why anybody would want to have press conferences today, this day of all days, May 31st. But I would feel really bad if I didn't tell you about that, and then like something crazy happened, and you're all like, "What? What happened?" Hey, they filled me. They filled me finally. Actually, not only did they fill me, they went up 2 ticks. Well, that's kind of curious. That's shenanigans, because there was like no change in cumulative delta, no change in the currencies. The market makers just decided to pull their offers and then moved up 2 ticks and filled me 3 ticks. Cool. I can put this like if this one, I put it like 1 tick beyond 109 even. Let's see. You think that they'll fill me before the end of the session? A little iffy on it. It looks like it's gonna be close, don't you think? It looks like it could be close. Of course, if we're getting another leg, then they're just gonna fill it like right away, right? Okay, here's Yahoo Finance repeating Nick Timmerow saying the Fed stance of higher for longer likely not shaken by new Fed inflation reading. I'm seeing so many comments on Twitter and stuff that I think are just hilarious, but probably not appropriate to bring up today. I'm kind of like, oh, I wish I had another contract. I put one on 29 just in case. I'm kind of like, oh, I wish it could be taken. I kind of feel like that I should be trying to take 1 tick like every step here now. It's just so thick. Heck, why not? All right, sure. Yeah, they're not going to fill that one either, huh? Do I need to refresh the Financial Juice webpage? Oh yeah, you're right. I do see a little thing saying that. A few minutes ago. Okay, try that. Oh, they didn't hold that one, huh? I am not intending to average into that trade. Instead, I want to make 1 tick on those extra contracts. So if I get filled at 29.5, I will just take the 1 tick and take it off at 30. And if it just slices right through me, then like, well, that sucks. Right? But it's given me pretty good signs that they want to continue up. I still just do not feel comfortable doing it on my live account for whatever reason today. And I might be like that for another week. You know, I think that next week we should get enough economic news that I should probably take some trades and stuff, but I'm still going to be really cautious about it because I'm supposed to like heat next Saturday. So I'm still going to be like, I give you an example. On Wednesday night, I think it was, like, we're putting the kids to bed and my wife gives Asher the freaking iPad, which I just hate because number one, I've got this light and stupid kid sounds in the bed next to me. I'm trying to go to sleep, right? But then number two, because he's like way less likely to fall asleep when he has blue light in his face, right? It keeps you up. He was not so ready to go to sleep though, but that just made me so mad, and I went to sleep so mad. I don't think that it was really a huge deal, or that it should be a huge deal, but it really, really upset me, right? So why do I get so much more upset than I normally would about that? Well, maybe part of it is that like this is the thing that's been going on and on, and like I feel like I get ignored on it. But I also think that it's just that like when I'm like really lifting heavy and my nervous system is doing the super compensation sort of a thing, like it really, really affects things, your mood and how you think and all of this sort of stuff. And I've had many really, really bad trade blow-ups in those periods. So the thing is, I know we haven't talked about this for a while because it's been years. The truth is, I think this is the first time since COVID, frankly, that I've been able to get all the way through a cycle and be like heavy and feeling good at the end of the cycle. Like I almost always get super sick somewhere in there and then feel like that, you know, I'm not lifting very well because I missed a critical point, or like I missed a week or something like that. Right? How much you? But we don't bench press in Olympic weightlifting. So. Oh, I said that there was the 29.5. I would take the profit at the 30, right? So. I give it to you. You did a good job maintaining that today. It is a completely normal day and nothing happened. I know. Well, but you know what? The thing here is Uzi, is that I'm actually talking about two things. And you know about one of the things, but you haven't picked up on what the second one is yet. And I've been trying to, that's why I was like overly exaggerating it. To say that there's nothing unusual or special about this, the 31st of May. It's just the last day. There's nothing unusual about it. Yeah, you don't bench press in Olympic weightlifting. There's the Olympic weightlifting is two exercises. There's the snatch and there's the clean and jerk. The snatch is when you take the bar, it's on the ground and then you lift it up and it goes over your head. And then there is the clean and jerk, which is where you lift it off the ground onto your shoulders and then you push it up over your head. Those are the two things. And bench press, well, why do people do bench press? Bench press builds your chest, and your chest is actually more about moving your hands across your body, right? So unless you're like a boxer, like having a huge chest is not really that useful to you. So you will find Olympic weightlifters will have big chest muscles, usually like the Olympians, because they're on steroids. But Olympic weightlifters don't specifically train chest. It's actually kind of like, we don't want to add more muscle where it's not going to be used, because that's just more weight that doesn't help your lifts. So the part where you lift the bar over your head is practiced through military press and bench press? No. So we'll definitely do presses. You definitely do presses. So this is another interesting thing about Olympic weightlifting, is that it is all about power. It is all about power. And power is a completely different measure. So like when you're sitting there and you're doing a bench press, that is like static strength, right? And it's slow and you're pushing through it. It's completely different from the dynamic power muscles that are doing a really fast movement, right? And like training your bench press doesn't necessarily give you those dynamic movements. So for instance, if you want to do for shoulders, that's where you do like, what do they call them? Landmines. You know, like you take a bar and you put one end of it on the ground and then you hold the other end of it and you go like this, you know, and maybe you put a weight on the end of it and you do that, you know, those build power, right? On the Olympic weightlifting, you could do that, but in Olympic weightlifting, we just do the movement, we do the jerk. That's the best way to train it. So then why do Olympic weightlifters do all of these other exercises? Is it like, because aren't there some things that like the Olympic lifts don't build very well, and so you do them to supplement or whatever? Well, there's a few things like that, like your squat and your front squat, and like RDLs, things that will build your posterior chain. Those definitely help. Okay, but most of the reason why in Olympic weightlifting you do supplementary exercises is really more to focus on one specific part of the lift. Because the issue is like, if you screw up at one point in the lift, then everything else after that is kind of screwed up too. So what you might do is you might say, okay, this part is hard. Like doing the clean, that's hard and that's really exhausting. So let's do an exercise where you're not doing the clean part, and you have it on blocks and you're just doing the jerks, for instance. Oh my gosh, Paul, he figured it out. It's my birthday, guys. You guys are the best. I knew. Last year, somebody came in and said it without me even doing anything. I knew you would figure it out because you are the best audience a creator could ever have. Wait, how old am I? It's 2024, right? So that means I am 39. I'm not over the hill yet. My wife is over the hill. My wife, you know, aren't you supposed to have a huge birthday party for when you turn 40? But like, we didn't do anything for when my wife turned 40. So maybe that's only if you're a man, you can do that. If you're a woman, turning 40 is like a really awful thing. So you don't want to highlight it. Guys, I'm so glad you remember. Did you get me anything? You didn't get me anything? You know what? We could get something. What should we get? What could we get? Let's see here. Now I forget the name of the. Yes. I don't think I want to buy a new UPS right now. Might be able to go into an audio interface. What was the audio interface that I wanted to get? I think that I was looking at the road. Oh, it's 500. I don't know if I want to spend $500 right now. Okay, so there's the futures data. I think that's like 320, but like I've been saving up for that, so I can do that. And then I think some. Oh, do I not have it on here? Oh my gosh, my mind just blanked. I was like, oh, I need to add this one, and then my mind went blank. That's so funny. SSD. There's another SSD to save. You know, I have like big stuff for long-term storage, but I kind of wish I had an SSD, extra SSD, so that like I can save the recording to that SSD and it'd be really, really fast, but not like affect the performance of anything else. Oh my gosh, did I get fills on both of those? Hey, that turned out pretty good. Well, anyways. I also kind of think maybe I could do curtains. Like if I had better curtains there, curtains over that thing, that would maybe help in the room. I don't know if that's a huge deal. A prime lens is probably a little bit more. I think I want to I want these to be like about the same amount. That one I'm okay with it being more, but let's try and keep it to something that's like $100 to $200. We'll do a light. You don't like birthdays? Why not? Okay, so you guys have any other recommendations? So there's the 4 that I got. That's the futures data, the Incerto series, even though well, actually I haven't read all of them. I can get the premium one. It'll look super good on my bookshelf back there. And then if I ever get the privilege of talking to Mr. Taleb, assuming that he ever gets off this whole, Palestine thing. I've been AWOL lately. Then he can, I can show him that I do have the premium one on. That would be great. Or I could get a light. So if I got another light, I could get like a larger softbox, and that might improve the quality of the regular videos. And I could like move it around, because I've been recording myself weightlifting a lot, and I can't record it from one direction because there's no light. Your birthday song right there, the mumble rap. Yeah. I do want to buy DaVinci Resolve at some point too, but man, yeah. What about my regular wish list? You could get myself a gym belt or a shirt or something. Okay. Engage with your audience. Start a poll. What should we buy stuff for his birthday? Futures data. Clothing. What were we saying here? An SSD. Solid state drive. Or a light. Is that how we want to take it? You know what I really want for my birthday? I want this keyboard. It looks so cool. I don't think okay. Polls up. You guys decide what we're gonna give me for my birthday. I'll get one of these too, but like, you don't need it. Don't need it, so maybe in the near future. So that was it. There's nothing else. There's not like any kind of news or political battle thing going on today. Okay, actually there is, but I don't think that we need to talk about it today. I have a lot to say. I've noticed there's a lot of interesting stuff, but you know, like we got this weekend coming up. Let's see how the weekend goes. Talk about it on Monday. Huh? Monday. Now did they change like the interface, because now the poll is like white. Why is the poll white? That's funny. Come on, I know there's more than 2 of you here. Vote now. So if you vote, and then after that, I think there's like the 3 little dots in the upper corner where you can close it. Get a pair of workout sneakers. Okay, so oh my gosh. Okay, so this is something that I feel very mixed about. Okay, I do Olympic weightlifting. The reason that I picked up Olympic weightlifting was because well, first of all, I was just reading a lot of stuff about fitness, and I was like, well, I want to do something a little bit more hardcore. Yeah, what is the name of your broker? It is, oh, no reason to put it in there so many times, John. I use EdgeClear right now. They recently changed their name. It's all one word now. EdgeClear, not Edge Space Clear. Anyways, okay. So I picked up Olympic weightlifting because it was hardcore, and because my ex-wife, she had polycystic ovarian syndrome, and she needed to work out, but she needed to work out in a way that was like low impact, a way that it wouldn't like generate a lot of cortisol, because when you run, that generates a lot of cortisol and kind of makes the condition worse. So like running is not necessarily the best way to lose weight when you have that particular problem. Okay, so that's why we did it. Okay, I suck at it. I think that I'm making still some pretty significant technique mistakes, because when I got to 70 kilograms, my all-time high is 74. When I was getting to 70 kilos, I was not making them. I'm not staying over the bar, I think. I showed it to my coach, and she was, yeah, you need to be more forward. So maybe if I do that, I can get it, because I think that feasibly, given my other lifts and everything else, yeah, we're speaking kilos. But given my other lifts, because I can squat 155 kilos, and I can clean and jerk 100 kilos. And so normally you can like snatch like 80% of your clean and jerk or something like that. So I should be able to get to like 80, maybe even 90 kilos potentially, if I was actually like really. But the truth is that's just not very good. There are guys, okay, that are the same weight as me, but have better mechanical advantages and things like that. They can literally snatch 120 and clean and jerk like 150, 170. Like it's just crazy how much it scales. Like people same size as me, they can lift like literally twice as much, right? So I'm not naturally set up for it. So then the question would be, well, okay, so what are you naturally set up for? Well, I think the answer is that I'm supposed to run. That if I was a runner, that I could be good. Now, I was never good at running. Like in high school, I had a really high. Oh, why do you weightlift again? Because it was for my ex-wife. That was the exercise that we determined was going to help her particular condition the most. And then what happened was when we got divorced, she stopped doing it, and the team was like all I had. And so I just dived further into it. And this last cycle, I've been super what is the word? Engaged, motivated. I think it's because I bought shorts. I bought shorts with the 7-inch inseam, and I really like them. And then YouTube starts showing you the stuff. I'm just like, my day is like, get through everything so I can do weightlifting and then just rest. Right? Like, that's my day lately. How long? It was so long. Like, more than 10 years now. So, like, for somebody as experienced, it's really not good numbers at all. It really isn't. Okay. So, I have really thin wrists, so, I'm not able to put on a whole lot of muscle. So, like, that kind of puts a ceiling on me. But maybe I could be good at running, but I've never been good at running. I think that the biggest thing holding me back on the running is that, like, my toes want to turn out. I think I'm doing better with that now. So maybe if I did running, I always thought of you as really skinny. I am really skinny. I totally am. I mean, I have a lot of muscle on me. If I was not working out, so I'm like 74, so I'm like 160, 170 pounds. If I wasn't working out, I'd probably be 150. Anyways, there's one of my weightlifting sisters, I guess what we call them, one of the people on her team that's done the best. She used to be a runner. She would do running, and then one day, and she wasn't like particularly good at it. And one day, the end of the marathon, she was talking to people, and somebody was like, "Oh, you know what you would actually be good at with your proportions and musculature and everything? You'd be way better at Olympic weightlifting." She's like, "Okay." And her husband is like is an anesthesiologist, so they're loaded. I mean, they're loaded. And then they have their own business where they sell snowmobiles or something like that. Anyways, so she went all in on the weightlifting thing and is like a 5-time world masters champion. She was older, so, but she's really good. And it was all because somebody told her like she should run, or she was running and somebody told her you should do weightlifting. So I've always kind of thought, well, maybe I'm the opposite. Maybe like I'm doing weightlifting and I should actually be running. Like if I was running, I would actually be good at that. Right? So there's this part of me that is like, maybe if you put some effort into running and all of those things, you could get good at it. And maybe I could even do the kind of running obstacle courses that do involve a little bit more of your body, like these Tough Mudder sort of things, right? Like maybe I could be really good at that. But then another part of me is, I just really like weightlifting and I want to bust these ceilings that I got and go further still. So I don't know. I don't know what you mean by do you use AMT? What do you think AMT is? I love to run, but I'm too tall and heavy, so my knees and ankles suffer. Yeah, and that's the thing. I'm light, so my understanding is, like, I've had some military people tell me, like, oh, you always think in the military you want the big, burly guy, right? But those guys have a very difficult time, like, moving through the forest and stuff like that. Whereas the little guy, it's like, that doesn't have a whole lot to move around. That's really easy for them. So that's where I'm like, okay, running and/or like these kind of more like Tough Mudder, that sort of a thing, right? When I met my wife, she was trying to get into running, and then I got her into Olympic weightlifting. And I think she'd be really well suited to weightlifting, but kids get in the way of that one. Well, I was just giving an example. Like when there's rough terrain and you're jumping over plants and crawling through things and stuff. It helps to have a light frame. So my genetics come from somewhere, man. There's something that I'm supposed to be good at. Although sometimes I wonder, like, maybe I really am just evolved to just sit at a computer screen all day. Because I am pretty good at that. So when we do weightlifting, the program is all designed for you to peak at a certain time, right? Which would be next Saturday. And then after that, we usually have at least 2 weeks of like in between period, where either like sometimes we've gone to one of our teammates kind of has like a little bit of a CrossFit gym, so we would spend 2 weeks doing stuff at his CrossFit gym, and that was kind of fun. Or you just rest, or you do whatever you want. So maybe during that period I should run. In the past, I have done things like sprinting down the road, but maybe I should try for distance for those 2 weeks and see how I go. Now, the problem is that those two things kind of contradict. Like the running kind of hurts your weightlifting gains and vice versa. So that's why I'm kind of like, I don't want to give up weightlifting, but I do kind of want to try running. Right? Well, the reason it's on my mind is because TikTok keeps showing me stuff about running. It's like TikTok wants me to run for some reason. And I watch it, I'm like, okay, this is kind of interesting. You're doing all of these drills to run better with. By the way, it doesn't look like we're going to get the 109 even before we go. I'm a little disappointed. And I don't think I want to like hold it afterwards. This is a sim trade, it doesn't matter. Guys, it looks like we're buying futures data. Followed by the solid state drive. I gave a good, I might just get both. Do you have any cardio? Not really. That's the thing, Lucas. Not really. So, Olympic weightlifting definitely will get your heart rate going and everything, but it doesn't really build like endurance, So it's good, especially at the beginning of your cycle, to do some of those things like sprinting. And that's the other thing, is that when we're trying to build that cardiovascular fitness, usually it's done through sprinting and intervals. Because that gets you that cardio with, oh my gosh, is it really going to do it? Holy crap. That is so crazy that like I give up on it and it starts happening. This is just one of those sorts of things that makes me go like, okay, I don't think that the market is like watching me and reacting to me and doing stuff on the stream based on what I say. But like, if it was, what would be different? Like, really, what would be different? Because there's so many times where it just seems like it can't be a coincidence, Especially with the 9 o'clock thing. I think that that's because of the London close, but that's so often I'm waiting for a move and it doesn't do it until we're gone. Let's count that. They haven't cleared 109 even, and they haven't filled me at 109.00 half. But let's count it. Right? Don't be a dick for a tick. Well, with the way that traded, well, let's see here. How much was that? I don't have to do anything yet, but I might bring it down. And it depends on how they start behaving at 109 even. Usually, though, they will bust through it, right? So, do you think that gold will go up? Well, gold is not doing very well today, despite the treasuries moving up, right? Today is very different, though, right? I mean, look, there is, we are avoiding talking about it today. We'll talk about it on Monday, but there is the whole Donald Trump trial thing, and there's some implications for that, and maybe even some implications for the market. So there may be some of that going on. But it seems to me that what's happening today, obviously there's the flows that we kind of pointed out, but it seems to me that all of the sudden, well, not all of the sudden, it's kind of been like a slow shift, but now today it's very, very clear that the market seems to care more about growth data than it does inflation data. And that Chicago PMI was very weak and really hammered the S&P 500. And in the past, when we get that light growth data, the market has loved it because they say, oh, that's going to be lower interest rates. And now all of a sudden, bad data actually means sell. That's a big change for the market. That's something, maybe it's just a one-off, as there's always, but there seems to be a shift happening. How are bonds and yields tied? I mean, sometimes I don't understand why yields and bonds go up at the same time. Like sometimes 10-year yields are up or neutral, but the yen keeps rising. Okay, good question. So I'm the Federal Reserve, and I go and I say, you're going to give me $100,000, okay? And I will give you 2%. Why 2%? Because I'm going to pay you twice a year, and that means that each of my payments will be $1,000. So twice a year, I'll pay you $1,000. Okay? So you hold this bond. Now, here's the thing. Like, we talk about interest rates changing and all of this sort of stuff, but the reality is that coupon payment always stays the same. Okay? Does that make sense? It's built into the contract on the bond. It says, like, the reason they call it a coupon is because they used to give you a treasury as a piece of paper, and then they had these little pieces of paper that you would tear off to go and redeem. $1,000 twice a year, right? What happens if a month from now, let's do an extreme example, they're going to, again, when you buy them from the treasury, they're $100,000. Okay? But now they're offering a 4% coupon. All right. Awesome. You want to buy that one, right? You're getting twice as much. Now they're going to pay you $2,000 twice a year. So why would you buy this one? That would make zero sense. You're going to go and buy the one with the higher yield, right? Well, here's the thing. There's a secondary market for bonds, right? So what does this guy, he has this 2% coupon, and like, he needs the money now or something like that. So he can't sit and wait for, the 10 years for this thing to completely mature and him get him his, because at the end of it, then they give you the $100,000 back. Like, they pay you $1,000 twice a year, and then at the end of 10 years, they give you back the $100,000, right? So I want to get out of it. What can I do? I can sell it to somebody else. Well, why would anybody want to buy it if the yield is 2% and I can go and get 4% yield? You're not going to. So what do I have to do? I have to reduce the price of the bond. I basically say, okay, I'll sell it to you for $90,000. Yep, there you go. You sell it cheaper. Exactly. Okay. And so something kind of interesting happens, because you can go and you can look at, there's the coupon, but then there's like, okay, if I buy this today, it's been discounted to $90,000, right? If I hold this today, what do I actually make? If I hold this today, then I'll make the 2% on the coupon, and then at the very end, I'll also make this 10% bit at the very end, right? And then, this price basically will adjust to, compensate for the difference in yield there. I don't care enough to go and do the math right now, but right. And so what does that mean? When bond yields go up, prices go down, and when bond yields go down, prices go up. And that's why prices and yields are inverse. Do you think that fundamental trading is better? I think that the traditional conception of fundamentals is very flawed, because it's the orders that move the markets and not the fundamentals, right? But especially like the best way to invest is, well, index funds, but then beyond that, like buy and hold, which means that you really want to do your fundamental research on the stocks and hold them for a really long time. Kyle says, so ZN is this third-party market, you say, where we can buy cheaper or more expensive based on the current yields. Yeah, exactly. What's this? Lucas talking about sports again. The thing I care most about is contact sports like boxing, so always thinking what type of weight training to do. You think that weightlifting would be optimal for that? Okay, so if you are a boxer, the Olympic weightlifting can be very beneficial to you. Probably the most likely thing for you to do is just do cleans or hang cleans. Hang cleans is when you do it from your knees instead of from the floor. And that really helps you build the power in your legs. You know, and then that power, you can translate that into your punches, right? So it's common. In fact, you see him doing it in the Rocky movies. You see Rocky doing cleans. So, you know, a lot, any sport where there's power involved, and there's definitely power involved in boxing. Boxing, football is especially. If all of the people that do football instead did weightlifting, then the United States would probably win all of the gold medals in Olympic weightlifting. But since it's not popular here. So 108 to 109K is what you would be getting back from the Fed plus the interest rate at maturity. Well, okay, so like right now, what it's saying is you're paying 108. And then when it matures, they give you back the 100,000. So that kind of sucks, right? You're paying more than you're going to get back at the end. So that's what they call a negative carry. And there's all sorts of implications from that. That right now the carry is negative. In fact, I've never seen them. It happened. It once was the normal was that we would be below 100, but I've never seen that market. Maybe we will though. Now with interest rates having come up and everything, and if we start to get like more normal interest rates in the future, then potentially we will see a market again that just has a positive carry. But because interest rates have been so low, basically. You get into this situation where the yield that you get is less than what the rate of inflation is. So, like, you're actually losing money, right? And then the price goes above par. But people are still willing to buy it because I'm probably not planning on holding it to maturity, right? I'm just going to buy it for this temporary up move that I think is happening, right? Janet Yellen, in her last press conference as Federal Reserve Chairman, made a comment about the negative carry and how it leads to the yield curve being more likely to become inverted. That's very interesting. And if you want to do more about that, the best deep dive on that I've ever seen was when Janet Yellen talked about that in her last press conference. Okay, guys, I am going to go and buy some futures data, but it's time for me to go. I will see you next week. Stay excellent. Oh, wait, I can't. Still had my highlighter. Stay excellent.